Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwal, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. Markets have been a bit subdued in the last couple of trading sessions. Today also nothing that much of an excitement on the T Street.
Absolutely. If you look at the way how the markets are panning out, yes, not much of excitement coming in for the benchmark indices, but it's the Nifty Bank that is actually seeing a smart recovery from the day's lowest point. Right now, just barely into that negative territory. In fact, trying to break past to the positive territory. That's the Nifty Bank for you, where we're seeing good set of recovery. While you're talking about the benchmark indices, we are just there around that 21,550 to 21,570 mark. So yes, we are actually staying in a range when it comes to benchmark indices. Broader markets, on the other hand, also staged a good recovery from the day's lowest point, be it the mid-cap index or the small-cap index. Both of them are holding on to the positive territory near the day's highest point for the mid-cap index. Talking about sectoral indices, then is the IT sector that is the top sectoral loser at this point in time, 2% downtick, with metal, auto as well seeing weakness. But on the flip side is the PSU Bank Index. There's a top sectoral gain of 1.6% uptick, followed by power, realty, all of them seeing good gains. So that's the way how the markets are looking like at this point in time, Vinny. Yes, subdued trading session when it comes to the benchmarks.
Okay, and on that note, let's get started with those individual movers in trade which are buzzing either on the back of news flows or on the back of technicals. And on the technicals today, we're joined by Sumeet Mulchhandani, while from the research team, we do have Ashesha joining in with us. A very good afternoon to both of you all as well. And let's begin with the first stock for today. We'll talk about Avenue Supermart, or the E-Mart as we know it as. This one is in focus after its Q3 update. Overall, when you look at the update that has come in from the retailers front, it's been quite weak. When you look at it revenue, yes, the growth rate came in at 17%, but that's much lower than the past few quarters that we've seen of around an 18% growth rate that has been going in for the company. So on that front, yes, the sales growth rate is lower and it's seeing a decline. Other than that, obviously what analysts are highlighting also, that seems like the apparel segment recovery has not panned out as everyone was hoping it to be. The store additions by the company also have not been, the pace has not picked up. They've only managed to add around 5 stores in Q3. So total, so far they've added around 17 stores in FY24. They have a target of around 40 stores that they want to add in FY24, so one more quarter to go and still a long way in terms of store additions that they have to add up as well. Other than that, revenue per square feet, that surely has seen an improvement sequentially as well as on a year-on-year basis. Though after this, Macquarie said that, they're maintaining the outperform rating, but they're cutting the target price to 4,350 rupees per share. Weaker than expected sales is actually something that has impacted overall the performance of the company, as well as they've cut the EPS target as well. So that is why we're seeing DMart under pressure today.
All right, moving on, let's put this focus on the capital goods space in particular, because Jefferies has come out with a note where they're saying that the government's focus on indigenization as well as the rise in the capex should help industrials as well as power stocks in the year 2024. They've said that the industrials tend to give strong absolute returns, especially in the election year. What Jefferies has done is they've picked L&T as well as Siemens and Thermax and KEI as their top picks in the sector, with raising the target price of Thermax from 3,800 rupees per share to about 4,130 rupees per share, implying about a 34% upside from the last closing price. While for KEI Industries also, they're expecting the target now at around 3,850 as against 3,150 earlier on. What Jefferies also saying, they're expecting gains from capex cycle uptick for L&T power transmission segment for KEI and Siemens, and clean energy business for Thermax. So therefore, they've gone ahead and raised not just the target price for these counters, but raised target price for all the 10 industrials in its coverage universe. And on back of that, you can see good uptick coming in Thermax, KEI Industries, also for the matter of fact, Siemens, all of them seeing good gains.
Surely, Jefferies is giving Thermax a thumbs up. Sumit, you too have picked out Thermax on the technicals and charts. And specifically, after the correction that we saw coming in November, now Thermax has picked up pace also. Last 1 month, we've seen almost a 16% return. What are the charts indicating for you?
Hi, good afternoon to all. So, yes, if you see the stock gained from the 2200 levels till the 3200 levels. Afterward, there is a fall. But it took the perfect support of 200 moving average and also took a perfect support of Fibonacci series, which is a 61.8 level. So stock bounced from there. Right now it is just resisting to the previous high levels of 3200 range. So today the stock once was 5% up, right now it is just gaining the 2%. So we are just waiting for the levels of 3180 to sustain and give the close above. In fresh days it has formed a flag and fall also. So flag and fall, if we do the calculation, then the target can be 3680 and 3960. So the chart is positive territory. So just wait for the levels of 3180 on the closing basis. If anybody is holding, then one can keep a trailing stop loss of 2990 on the closing basis. So just hold, and for the fresh entry, 3180 will be the new levels.
Right, moving on, Shesha, let's talk about the oil marketing companies, HPCL, BPCL as well as IOC. All of them are abuzz in trade today, and why is that?
Well, yes, all three counters are gaining anywhere between 1.5 to 3%. Remember, last week reports suggested that petrol and diesel prices could be cut anywhere between 8 to 10 rupees per litre. But now, Oil Minister has gone ahead and clarified on record that they are not asking oil marketing companies to cut retail fuel prices. He also said that if the situation improves going forward, oil marketing companies will take the decision at the right time. Apart from this, he has also spoken about a purchase of fuel from Russia, where he says that oil marketing companies are buying nearly 1.5 million barrels of oil per day from Russia, and they are still getting a discount from Russia on purchase of crude oil. So on the back of this commentary that is coming from the oil minister, the stocks are gaining in trade today.
Okay, but also let's listen into the oil minister Hardeep Singh Puri and what he's saying in terms of the claims made there as well.
We had a target of 10% blending by November 2022, 23 or 22? 22. We did that 5 months in advance. Then we had a target of 20% blending by 2030. We brought that target forward to 2025. आप पीछे आपने कई कहानियां सुनी, आपने कुछ कहानियों को एग्जैजरेट भी किया कि यहाँ से फीड सप्लाई बंद हो गई, वहाँ से वो हो गया, सारा प्रोग्राम इज गोइंग टू बिकम वल्नरेबल. लेट मी टेल यू, yes, when you do a large scale transitioning like this and you're using diverse feeds, there are challenges, but we've not only met all those challenges, we met our 12% blending target, which was October 23, and we are well on our way to achieving the 20% target by end of 2025 instead of 2023. No discussion with the oil marketing companies on any such issue. And please, we are in a highly turbulent situation.
Right, so that is the oil minister talking about the ethanol blending as well as talking about the fuel price and where it's headed from here on. But Sumit, let's shift focus now to the banking space. Talk about Bandhan Bank. How is this one looking on the charts to you?
If you see the stock, it has almost from the 2020 levels moved down a lot, and but right now it is taking the good support. It took the double bottom at levels of 210. Last week it has broke the trend line. If you draw from the December 2020, so on the weekly time frame it has given a good breakout, but afterwards also it didn't sustain above the levels of 255. So but today in the today's session it is almost high by the 6%, and again it is on the same level of 255 to 260. So we are expecting a good upside movement. In the daily time frame it has formed an inverted head and shoulders pattern. So today if it is giving the closing above the 260, then good upside momentum can be created. So targets can be 293 and 316 here. One can keep a stop loss of 239.
Keep an eye out on those levels for Bandhan Bank. But let's move on, talk about VST Industries. This one is in focus, buzzing away in trade today also. Mild gains compared to yesterday's upper circuit, but that was mainly because Radhakishan Damani has bought 2.22 lakh shares in the company. That's 1.44% stake. That's additional stake that they've acquired. Was already holding through his group company, that's Derived Trading as well as Brightstar Investment, was holding around 30-31% stake. Now post this, he'll hold around 32% stake in the company as well. The seller of this was HDFC Mutual Fund, who sold 2 lakh shares, as well as DSP Mutual Fund, who sold 2.5 lakh shares. Now main reason is obviously triggers for VST Industry. One, the government has has kept a more stable policy for cigarettes now, so that is something that is aiding all these cigarette companies. VST Industries amongst one of them. Shift towards more of the organized players now, and that helps them in gaining market share, expanding distribution in newer geographies is what VST Industries is doing. Management has spoken about giving a good focus on recovering the cigarette volume growth, and the efforts that they've taken will be visible from FY25. So yes, because of this new block deal that we saw happening yesterday, Radhakrishnan Tamani adding more of this stock. We're seeing that the stock is in focus today.
All right, let's shift focus. Let's talk about the steel pack, and that is Tata Steel in particular, because you have Kotak that has come out with a note, Kotak Institutional Equities, where they've actually downgraded Tata Steel to a reduce from a buy rating, and they believe that the company's fundamentals have deteriorated, and they see the fair value at around 145 rupees per share. On back of this note, as you can see it on your screen, Tata Steel is down. In fact, the entire metal pack is also actually trading pretty lower in trade today. Tata Steel has rallied over 16% in the last 2 months, and Kotak sees a limited upside after the recent surge. They're seeing the downward pressure on India's steel spreads from Q4 FY24 for Tata Steel, and persistent pressure in the Europe steel spreads, and risk of delay in UK's resolution and completion of the 5 MTPA expansion. They're also saying there's a high inventory at mills and distribution channels, and rising imports are exerting pressure on the steel prices, and coking coal prices have also remained elevated. Therefore, they've gone ahead, downgraded Tata Steel from a buy rating to a reduced rating, and the stock is trading low of approximately 2% right now.
Let's move on. And Sumit, NBCC on the charts, what are you picking up here? Because 6 months, obviously, we've seen a very sharp run up, but the last 1 month, it had remained in a range. Today, again, finally, it started seeing an up move.
Yes, it was among the top losers when on the 20 December the market tumbled. So, but it took a perfect support of the previous resistance, that is the level of 72-73 zone. And today again it has crossed the previous high also. So we are expecting still more upside momentum till the levels of 94 and also 108 levels. But it has a holding period of around 2 to 3 months. So if anybody has a longer term view, one can hold with the stop loss of 72. But if any short term player is there, we will just keep a stop loss of 79. So just hold and ride the trend if possible.
Moving on, Ashesha, let's talk about Hero MotoCorp, and that one is actually sliding in trade.
Well, yes, weaker than expected auto sales numbers for the month of December is why the stock is under pressure today. The company reported December auto sales at about 3.94 lakh units, stable on a YOY basis, but much lower than what the street was working with. Remember, the street had estimates of about 4.5 lakh units of sales in the month of December, and hence it is much lower than what the street was working with. Exports, meanwhile, have risen to about 16,100 units versus 12,800 units that the company had reported same time last year. As far as outlook is concerned, that is positive. The company says that with increased government spending and improved liquidity, encouraging farm activity and upcoming marriage season, they say that a positive momentum is expected to build up from the fourth quarter of FY24. But of course, the street is not excited with the kind of commentary that they've given. The stock is reacting negatively, 2.5% lower in trade.
Okay, and rights on the chart, Sumit, what is the indication you're picking up for this one? Last 6 months, almost a 40% return. From here on, are you still expecting an upside?
The stock is in consolidation. Yes, the previously in the month of September, stock has made a high of 570 to 580 zone. But afterwards, we see a consolidation zone from there. But today it has broken the consolidation, inverted head and shoulder pattern is formed. The stock also again took the uptrend from the levels of 200 moving average and 50 moving average. So we are expecting today, if you see, there is a surge in the volume also. If you check last 2 to 3 months, today it has gained the highest volume. So we are expecting a more upside. It can be a breakout. So 584, which is the previous high, so U bottom will be the first target, and above the 580 levels, 625 can be achievable. So one can make a fresh entry here also, and 490 will be the stop loss.
Okay, let's move on and talk about PDS Limited. This one also is in focus on the back of a block deal that we saw happening last evening that we got in terms of the buyer's details. Now, the stock actually jumped up as much as 9%, more than 9% even as of now as well, after Malabar India Fund actually bought 10 lakhs shares in the company, and this is at around 0.8% stake, equity stake that bought into the company. On the back of that, we're seeing PDS Limited buzzing away in trade, still holding on to the strong gains of 9.6% as of now as well. 561, it's what it's trading at.
All right, moving on. Let's talk about Mahindra EPRC irrigation, and that particular counter is in focus in today's trading session on back of auto win. If you look at the stock, is gaining approximately 5% or so. They've said that they received 4 contracts for supply of micro irrigation systems worth about 13.34 crore rupees, and on back of that, you can see the stock is actually surging in trade, still holding on to strong gains of about 4.8% as we speak.
Okay, let's move on and on the charts, NLC India, how is that looking like, Sumit? Today we are seeing a bit of a fall coming in. Last 5 days also, we're seeing a bit of a correction coming in here for this one. Is it the right time to enter the stock, or maybe time to start booking profits? Sumit, I believe you're on mute.
Sorry. The stock has formed an inverted hammer also, and from the last 4 to 5 days, strong bearish candles are formed. So we are expecting a fall till the levels of 220. So if the 220 is broken on the daily basis, then we would just advise to exit the stock as of now, because it has given a good rally, and on the indicators also it is in the negative. It is forming the negative divergence, and also in the overbought zone. So keep a strict stop loss of 220. So below the 220 levels, we are expecting more 10% fall till the 190 levels. So better to book profit here.
All right, moving on, Ashesha, let's put the spotlight on the railway sector, then RailTel as well as RVNL. Why are they in focus?
Well, yes, both these counters are in focus on the back of order wins. First up, let's talk about RVNL, where their joint venture has received LOA for major upgradation and redevelopment project for one of the railway stations. The total project cost stands at about 123 odd crores, and RVNL's share stands at about 60 odd crores. 30 months is the time period of completion. RailTel, meanwhile, has also won an order from RVNL worth about 35 odd crores. This is for data center hosting and application support services for a service period of about 3 years. So on the back of these 2 order wins that have come for both of these counters, we see that spike come in. RailTel is up 3%. RVNL, meanwhile, is also gaining nearly 4 odd percent.
Let's move on and understand the charts of Solara, Active Pharma then. And Sumit, what are you picking up in terms of targets? Last 1 month, specifically a sharper uptick that we're seeing for the stock. What are you seeing here?
Stock was in the consolidation and the downward channel from long time, but if you will see on the weekly time frame also, it made a double bottom from 350 level. First it took the support in June 2022, and right now it's same in the November 23. But from last 8 to 10 sessions, it has given a good bounce back. In the last 2 sessions also, the stock is up by the 12%. A strong trend line breakout is there with the follow up also. So we are expecting much more higher levels from these current levels. Current market price is around 407. So utilize the dips till the levels of 390 and 400. So just keep a stop loss of 350 here for the target of 495 and 550.
Right, so that's the take coming in on Solara Active, and here's a note for all of our viewers. Scheduled for the 7th and the 8th of January, the Tamil Nadu Global Investor Meet 2024 will see the entry of several international industry giants into India through Tamil Nadu. Tamil Nadu over the years has grown to become India's 2nd largest economy, and the state has forward-thinking industrial policies and a commitment to building an unmatched talent pool. Here's a special report on what makes Tamil Nadu an economic powerhouse.
Pioneered by visionary leaders who masterfully balanced social justice with economic growth, the Dravidian model has catapulted Tamil Nadu to become India's 2nd largest economy, ranking among the top 30 global economies. Under the astute leadership of Chief Minister M.K. Stalin, Tamil Nadu is on an ambitious trajectory to become a $1 trillion economy within the next decade.
We really are keen on all that is cutting edge, and especially in the energy sector, we are very, very keen on the hydrogen value chain, and we have already opened up talks, and some of them have already signed MOUs with us to get out the hydrogen molecules as soon as possible.
The economic prowess of Tamil Nadu is a clear indicator of the Dravidian model's success, contributing 9% to India's GDP.
Investments coming in from all over the world, and every investment that has come in has started rolling out and started business, started giving employment opportunities in rapid pace too. So that in itself, the pace at which things get done in Tamil Nadu.
With its skilled workforce, supportive policies and established industrial infrastructure, Tamil Nadu not only promises to enhance India's self-reliance in defence production, but also positions itself as a pivotal destination for investments and collaborations in the defence and aerospace sectors.
Okay, but with that, we are absolutely out of time on this edition of Market Fatafat. So thank you so much, Sumit, as well as Ashesha, for joining in with us. But viewers, do not forget, ET Now Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, a groundbreaking campaign to help viewers build their personal finance portfolios through regular and disciplined investing. Nivesh Day is being celebrated on the 5th of every month. So do join ET Now, Swadesh and Sundaram Mutual to learn how you can build your financial future with an SIP in mutual funds. And with that, it's a goodbye from Cheryl, myself, as well as the team who put this show together. Don't go anywhere. Tracking Trends will be taking you all through the next half an hour of the show.